Let's go ahead and look at local independent branches. Now, these are branches which maintain their own set of financial statements and books of accounts. However, so we can say that these branches maintain their own set of financial statements. That's their major characteristics: maintain their own set of financial statements and books of accounts They maintain their own set of financial statements and books of accounts. Now, the head office will still play an oversight role. The head office will still play an oversight role. In this sense, the head office will verify the operations of the independent branch, and to verify the operations of the independent branch, the head office will have to maintain an account known as the branch current account. We have seen that the head office will play an oversight role, and to play this oversight role, it will maintain an account known as the branch current account. The branch current account. And similarly, the branch should also maintain an account known as the head office current account. The head office current account. Similarly, this is maintained by the head office, and this is maintained by the branch. Now, let us look at this branch current account into detail. And we have said that this account is maintained at the head office. It is maintained at the head office. It is maintained at the head office to record the transactions between the head office and the branch. To record the transactions between the head office and the branch. The head office and the branch. Now, let us look at the format of the account. The format of the account will look something like this. So we have the branch current account, maintained by the head office. So we will start by the balance, or with the balance brought down, and record it there. Now, this balance in the branch current account will represent the head office investment in the branch. It will represent the head office investment in the branch. Next, we have the branch profit. We include it here. Branch profit. We are going to include it here. And we have the branch loss. The branch can also make a loss. Branch loss. So if it's a loss, we go ahead and include it there. So we also have expenses incurred by the head office on behalf of the branch. Expenses incurred by the head office on behalf of the branch. On behalf of the branch. On behalf of the branch. We record it there. Next, we have remittances by the branch. Remittances by the branch, the remittances by the branch. So this is any cash that the branch has remitted to the head office. And next we have cash in transit. Cash in transit. Cash in transit. We also have goods in transit. Goods in transit. And I don't think there's anything else, so we can get the balance carried down. The balance carried down. There is cash in transit and goods in transit. The balancing figure will be there. Now, that is our branch current account. Next, let us look at the head office current account. The head office current account. So as we said earlier, this account is maintained by the branch, maintained by the branch. It is maintained by the branch to record the transactions between, to record the transactions between the branch and the head office. The branch and the head office. Now we can create the head office current account. I show you the format. Head office, office, current account. The head office current account. Go ahead and create that. So we start with the balance brought down. Now this balance brought down is the balance that will represent the operating capital of the branch. It will represent the operating capital of the branch, and therefore we will show it later on as an equity component in the books of the branch. We will show it as an equity component in the books of the branch. So we record it there. And then we have the goods from head office. We record them there. Expenses paid by the head office. By the head office on behalf of the branch. On behalf of the branch. Next we have loss for the year. We record it there. We have purchases of property, plant and equipment on behalf of the head office. Purchase of property, plant and equipment on behalf of the head office. We record it there. And that's it. We have our head office current account. Now recall that the balance in the branch current account should be equal and opposite to the balance in the head office current account. This balance here, balance carried down, where did I indicate mine? Okay, it should be here, balance carry down should be here. So those balances should be equal and opposite. Should be equal and opposite. This one here and this one here, they should be equal and opposite. However, there are circumstances where these two balances may not be equal, and the balance in the head office account may be more or less than the balance in the branch current account. So the balance in the branch current account should be equal and opposite to the balance in the head office current account. However, there are circumstances when the two balances will not be equal. So I want us to quickly identify the circumstances under which those two balances will not be equal. And the first one is when there is cash in transit. When there is cash in transit, the balances will not be equal, because on the other hand, the branch will state that they have paid the head office, and yet the head office may not have received the payment. Another instance is when there are goods in transit. So the head office may dispatch the goods to the branch, but the branch may not have received the goods and will not therefore record the transaction, and again the balances will not be equal due to that. Another reason is when there is interbranch transfer. So those are the three reasons that will make the two balances not to be opposite and equal. The next item I want us to look at is the concept of unrealized profit. Now, unrealized profit arises when goods sent to the branch at a profit remain unsold. When goods sent to the branch at a profit remain unsold. Remain unsold at the end of the financial year. This implies that the profits on those goods remained unrealized, and it should be eliminated, So that's it. The next item I want us to look at is the preparation of the final statements, the final financial statements.